Well, hello and welcome back to Susty Talk, edie's series of video interviews designed to keep you feeling connected to sustainability leaders throughout lockdown 2 and beyond. And I'm delighted to have Yan from the Global Returns Project on the call today. How are you, Yan?
I'm very well, thanks. How are you?
Not too bad, not too bad. But then it is only day 1 of 30, so I'll get back to you in a month. Whereabouts are you calling from today?
I'm in Cornwall, so I've been here pretty much since the first lockdown.
Mm-hmm. I imagine that must be quite tranquil.
It is actually. It's quite peaceful, and it's quite a good place to work from with all this technology that we're all using now.
Mm-hmm. Well, thank you so much for taking the time to come on. I don't think you've had an interview with Edie before, so for the benefit of people watching, would you mind giving us an overview of your career and what it is you do at the project?
Yes, I'd be happy to. So for a long time I worked in finance. I was initially I was an investment banker, and I worked at Salomon Brothers and then at Citibank. Mm-hmm. But then around 2002 I set up an investment management business called Finisterre Capital with 3 friends. And I ran that until 2014, when I retired from finance to come and live in Cornwall and run a farm, which is where we're speaking from now. And it's an organic farm, and we're doing a rewilding project as well. That's my career before the Global Returns Project. Mm-hmm. Now, with the Global Returns Project, I'm one of the founders, and along with my wife and my co-trustee Jasper Judd, so I'm one of the people that is running the project.
Mm-hmm. And what are the aims of the project for people that might not have heard about the launch? What's the motive behind setting it up?
So we're trying to mobilize people and help people to fund climate solutions. So we do research into not-for-profit climate solutions. We try and identify the best organizations, and then we're working to convince financial institutions to make it easy for people to reinvest in Earth, which means to donate just 0.25% of their savings and investments to the best not-for-profit climate solutions. And by selecting a basket, it means that we've done a lot of the background work, we've done a lot of the research, and people can just, the idea is that people can just come onto our website and they can reinvest in Earth, which means they donate to us and the money goes straight to our chosen projects. And the idea is that eventually we'll get financial institutions to offer this as a service to all their clients, so that it becomes a normal thing for people to do when they're looking at their savings and investments.
Mm-hmm. And it's clear to see from your background in finance why you'd want to set that up, but what about the backgrounds of your co-founders?
So my co-founder Jasper Judd is actually he's actually a chartered accountant, but he's been in business for many years at board level on various corporations, and he's now a non-exec of a couple of investment trusts. But so his background is really quite financial as well. But we both have a keen interest in the environment. One of our other trustees is my wife, Camilla, and she has a MSc in environmental technology and has worked for years for various environmental organizations, including Greenpeace, where she was a researcher. We approach this as, if you like, the intersection between environmental work and finance.
Mm-hmm. And why have you chosen to focus on these not-for-profit climate solutions? I might have to say it's not something that I see a lot in the finance sector. Normally we hear about companies that are trying to either be more sustainable or for-profit startups that have sustainability built in. So why have you guys chosen this focus for the project?
Well, market solutions can only get us so far. There are a lot of things that market solutions can achieve, and there are some amazing new technologies which are disrupting markets in energy, like renewables. There are lots of amazing things happening in food production with precision fermentation of proteins and new growing techniques. There are lots of things happening in transportation with electric cars and soon autonomous vehicles and so on. And all of these things are going to be really helpful as part of the solution to the climate crisis in terms of decarbonising the economy. But they can only take us so far, and they'll take quite a long time to be rolled out and implemented. And in the meantime, there are also a range of problems which cannot be addressed by markets. So there's no market solution for protecting rainforests, or for suing the polluters, or for protecting other important carbon sinks.
That makes sense. So it's stuff that's sort of more shovel ready and where there isn't a market for it.
Exactly, and it's work that would not happen. ESG is the growth of ESG is fantastic. Impact investing is very effective and is clearly a good thing, but it doesn't reach a lot of the things and a lot of the projects that the charities working on climate solutions actually do.
Mm-hmm. That's understandable. And then I wanted to ask a bit about the background of the project, because we've all heard about how much individuals want to know where their money's invested and how much they want it to be invested responsible. There are so many surveys on that, but what's the appetite been like from the business side of things? What's it been like to engage with the financial community to get them to offer this 0.25% option?
Well, so it's very early days for us. We only just launched just over a couple of weeks ago. Clearly, there's been a lot of background work and a lot of research to get us here today. But so from that point of view, it's very early days. But in some of our initial conversations, it became clear that whilst financial services companies are receptive, and there are lots of reasons to think that they actually, many of them genuinely want to become more sustainable, and they're feeling pressure from their clients to do so. It would still take a very long time, we thought, to get financial services companies to do this thing, just if we just turned up and say, we've got this idea. So in order to make it real, we thought that the fastest way to make this happen, because after all we are in an emergency, the fastest way to make this happen is to appeal directly to the public and to say to people, are you prepared to commit to give 0.25% of your savings and investments every year to reinvest in Earth, to do this, take this action? And if we could get a good number of people to do that, we would have clear evidence to show to the financial services institutions that people want to do this, that their clients,
of course,
want to do this. And so that's why our campaign actually has two strands to it. One is to appeal directly to the public, get people to visit our website, look at the projects that we're backing and reinvest in Earth. But the people who do that are also helping us to do something much bigger, which is to convince the financial institutions that this is something that people want to do. And then that will create a much bigger change, because then people will be offered that option as part of their normal review of their finances, or when they're looking at their portfolio, or when they're talking to their private banker, or whatever it is.
Mm-hmm. Yeah, this is something we've seen a lot of, that we've seen lots of specific thematic funds launching around ESG and around the SDGs, or even things more specific like the circular economy. But then the broader financial picture is just so much bigger and isn't like that. So what would you say needs to be happening now, to make sure that this is business as usual rather than an add-on, rather than a niche part of finance?
Well, what needs to happen is we need to build up the number of people who join our campaign, because that's going to give us the credibility and the influence with the financial institutions, because they will see that people want to do this. And when we find those early adopters amongst the financial institutions, they will roll that out to their clients. So it completely changes the dynamic if you are presented with an easy tick box option when you're looking at your portfolio or talking to your financial advisor, and they say, well, do you want to reinvest in Earth this year? And you tick the box, and it's something which then happens automatically. And so from a behavioral point of view, the uptake of that, the number of people who would actually take action, would be significantly greater. And it's not an either or. It's not it's not ESG or reinvest in Earth. They're complementary activities. They're obviously slightly different. We know that financial institutions in many cases are trying to change and are trying to improve things. Often it's just in response to competitive pressure and client pressure. But we've got evidence from the task force on financial disclosure of climate risks. We've got evidence from the global investor statement on climate change, where they're writing to the G20 and saying, we think the governments need to do more about the climate. Well, this is, if you like, part of our response to them, was say, well, actually, the financial institutions, can do a lot more about the climate, and we're not asking them to use their money. We're saying we just want you to give your clients the option to do this and make it easy and normal for everyone.
Mm-hmm. And I'm presuming that things to do with how the financial industry is approaching sort of the green economy have changed quite a lot in the years since you left and moved to Cornwall.
Well, so I only left 6 years ago, but things have been accelerating, and we've seen tremendous growth in ESG and sustainable funds and impact investing, and that's all fantastic. That's all welcome, but that's a necessary part of the change that we need to make to address this challenge. And we just thought, well, if we look at global savings that private individuals have, they have $140 trillion of assets. If we could convince some small proportion of that, and we're saying 3 in 100 people eventually by 10 years from now, then if those people each agreed to give 0.25% of their savings and investments every year, that's where you'd be raising as much as 10 billion every year. Mm-hmm. And obviously that would make a significant difference.
Of course. Well, yeah, and that's all the questions I have for today, but I know that this is going to be an absolutely massive topic for the rest of this year and beyond, so I'm sure we'll catch up soon.
Great. Well, thank you very much. Very nice to talk to you.